Hi, everyone, and Professor Graham. Good morning. I'm Huriel, and here with me are the presenters for today's discussion. We have Adelaide, Jeffrey, and Harrison. Our group will be discussing the New York Stock Exchange, and our chosen IPO is Uber. So the New York Stock Exchange is one of the world's largest and most well-known stock exchange located on Wall Street in New York City, USA. It serves as a marketplace where buyers and sellers come together to trade stocks, bonds, exchange-traded funds, and other financial instruments. The New York Stock Exchange was founded in 1792, and it has played a vital role in the growth and development of the financial system. It acts as a primary avenue for companies to raise capital by going public and selling shares to its investors. In return, investors have the opportunity to buy and sell ownership stakes in these publicly listed companies. The exchange operates using both traditional floor-based auction methods and electronic trading platforms. So, in the traditional floor-based auction method, traders gather on the trading floor to execute transactions through open outcry. While this floor based system has historical significance and charm, the electronic trading has become the dominant method for executing trades in the recent years. So, the New York Stock Exchange is renowned for its iconic and opening and closing bell ceremonies. So the New York Stock Exchange has its own set of rules and regulations that governs how trading takes place on its platform. It operates within the wider regulatory framework set forth by the stock exchange and other relevant regulatory bodies. The New York Stock Exchange must comply with these regulations to ensure the integrity and transparency of the financial markets and to protect the interests of the investors. So in 2013, Continental Exchange acquired the New York Stock Exchange, making it its subsidiary. So, as a quick overview, ICE is a diverse global financial service company that operates a wide range of exchanges, clearinghouses, and data services. Overall, the New York Stock Exchange plays a crucial role in facilitating the buying and selling of securities, providing a platform for companies to raise capital, and serves as an indicator for the condition and performance of the larger economy. Its significance extends beyond the United States, with a global impact on investors, businesses, and financial markets worldwide. So let's turn over to Adelaide to introduce the group's chosen IPO.
Thank you, Harold, for your explanation. So we decided to talk about the Uber Technologies IPO because it offers important insights into the company's growth, challenge, and potential implication for investors and consumers. This IPO took place on May 10 of the year 2019 with an IPO price of 45 per share. Uber raised approximately 8.1 billion. The valuation of IPO is 82.4 billion, refers to the estimated total value of the company's outstanding shares at the time of its initial public offering. In this slide, we can see that its shares are listed on the New York Stock Exchange under the ticker symbol Uber. It achieved a market capitalization of around 97.43 billion. These pictures have been taken from Yahoo Finance, a powerful tool that provides valuable insights for investors such as stock price tracking, volume analysis, financial metrics, charts, historical data, sector and industry comparisons, and much more information. As we can see in this slide, this is the prospectus of the company. It includes a comprehensive overview of Uber Technologies' initial public offering that highlights all the key details of the company's financials, growth strategy, and potential opportunities for investors, as well as risk factors, market analysis, and regulatory environment. So, in the next slides, Geoffrey will talk about the IPO process.
Okay, thank you, Natalie, for your explanation. Here comes the several steps for the IPO process. The first one is the company prepares for the IPO submission. The company selects an underwriter and starts preparing financial statements and documentation for the SEC registration process. SEC stands for the Securities and Exchange Commissions. Um, The SEC will review the company's registration statement, which includes financial information, business details, and risk. The registration statement consists of a preliminary prospectus known as the red hearing, which is filed with the SEC for public review. When underwriters' due diligence will come for the second step. The underwriter analyzes the company's financial management team, industry trend, among other factors, to determine the IPO's price range and initial shares that will be offered. And then the company files a registration statement with the SEC, which will involve disclosing financial, legal, and risk information about the company and the proposed offering. There will be the roadshow after the SEC approved the registration statement. The company goes on an IPO roadshow. During the roadshow, the company's finance management and underwriter pitch the IPO to potential investors, including institutional investors and analysts. And the valuation and pricing of IPO will come last. The underwriters and the company agree on the final price and quantity of shares to be sold to investors, which will determine the company's market capitalization. The IPO takes place, and this will be the open day. Shares begin trading on the stock exchange, and the company's share price is publicly available. And there will be a long-term strategy for the company to use the proceeds from the IPO to fund growth initiatives, make strategic acquisitions, and repay their debt, with the goal of creating long-term value for shareholders. And investors continue to buy and sell shares. The stock price may fluctuate, and the company releases financial results and statement. And there are also in conclusion and Q&A after IPO results. There are industry trends and future predictions. The first one will be IPO boom. The United States has experienced a record high numbers of IPOs during 2020 and 21 due to the pandemic-induced economic uncertainty and low interest rates. The special purpose acquisition companies, this is the SPACs, have gained popularity as an alternative to traditional IPOs, as they involve merging with an already listed SPAC, which allows companies to go public more quickly. And the direct listings enable companies to go public without raising additional capital by selling shares to the public and can help avoid underwriter fees.
Thank you, Harriel. Thank you, Adeline. Thank you, Jeffrey, for your contributions thus far. To conclude, Uber Technologies was able to have an initial public offering on the New York Stock Exchange in order to raise funds to further its growth, a decision that has paid off vastly for Uber Technologies. And as it stands, for those shareholders who purchased at the IPO, they currently, and still holding shares today, they currently have a gain of 12% on their initial investment back in 2019. However, this is in comparison to its all-time high, in which if you held and then sold, you would have made over 30% on your investment. Now moving on to the next slide. On the screen in front of you, you can see the references which was used to source the information presented before you today. Feel free to have a look in your free time. And lastly, on behalf of my group mates and myself, we'd like to thank you for your time, your attention, and hope you enjoyed this presentation. Hope it was informative to you, and hope you have a great rest of your day. Thank you.